Afternoon, everyone. Thanks for taking your time out the afternoon to join us. My name is Matt Lewis. I'm the Indirect Tax Manager here at Tax Systems. And today we're going to talk about past exemption special methods, which I know many people are riveted about, but mainly around how we can benefit from automating the sometimes complex calculation process. I'm joined by my colleague Drew, who will provide us with a live demo a bit later, so you won't have to listen to me droning on for too long. But to begin with, if I can make technology work, here we go, there we go. We're just going to cover a few things today, basically what the benefits of automating past exemption special methods, particularly around the changing regulatory landscape that we have, with MTD and everything else that's going on in the world, but also how it can support the process with accuracy and efficiency, and how we can keep HMRC happy. And Drew will then take us through a little bit of a demonstration about how it looks within the Alpha VAT system. And we'll have a look at a couple of use cases at the end if we have time. So, to begin with, we'll talk about some of the challenges surrounding VAT and past exemption special methods, apart from the time it takes HMRC to actually agree a special method, which is always a long one, and how they fit under with the wider challenges that are going on at the moment with the current climate. And some of the initiatives, the way the businesses are adapting at the moment. So in terms of challenges, there's a fair few. We have the normal day-to-day VAT challenges with data and lots of spreadsheets, but we also have, the COVID situation we have at the moment, initiatives from HMRC, etc., etc. But what I'll do is I'll break them down slightly to give it some context. Our normal day-to-day challenges, one of the biggest challenges we have with doing anything with VAT and our returns is the time. We did a survey earlier in the year, and we were quite surprised that some of the 20% of the businesses we spoke to spent over 50 days a year pulling together VAT returns. And typically it's down to a very small number of people in organisations to actually put the VAT returns together that have the specialist knowledge sometimes that's required, particularly around the past exemption and the methods used. It takes a lot of time. It's an onerous and time-consuming task. There is the more complex the VAT return calculation is, the more scope there is for errors creeping in. And for some businesses, certainly some of the larger businesses, a small error, a fraction of a percent in a past exemption method can produce an alarmingly large amount of money in results in scrutiny from HMRC. They don't like you getting it wrong. And we are very heavily, generally, very heavily reliant on spreadsheets and producing our past exemption calculations. And they have their own potential issues as much as it is a fabulous tool, and it has its place in our processes. There are surveys out there that suggest that some 88% of contain errors, and they are very difficult to audit, and so produce their challenges from an accuracy point of view. But we also have this current crisis that we're going through with COVID. I don't think anyone could have predicted back in March how long it was going to go on for, what the effect of for businesses and for economies. We knew it was going to have an effect, but not quite as much as we have. And what it's led to is kind of a new normal in a lot of cases. And that brings about certain challenges, but certain advantages as well as we go through. we have less face-to-face meetings in the business. And I know from my own experience, when you need to ask a question or just want to clarify a point, that usual 2-minute, 5-minute conversation in the office or at desk ends up being a scheduled meeting or call, which tends to take more time and therefore puts even more pressure on what we're trying to achieve. However, it has meant that we have embraced more around technology and adopted a lot more in the digital space to enable us to do our day-to-day work. And the more solutions are available to us today, it's given technology companies like ourselves more time to actually develop systems to help customers do what they need to do. What we're also finding is, and we're seeing in a number of businesses, is an accelerated use of data to drive business decisions. There's more forecasting going on as a matter of course, and there's a greater use of real-time transactional data to provide insights to business decision makers, rather than just the traditional historic summaries. And we've seen this from the tax authorities as well. They have had a number of initiatives on the go for some time across the globe to really bring in real-time transactional compliance and data rather than relying on historic, annual or quarterly or whatever it is returns, depending on the tax. And there's a real drive for more digitalisation from them. We also have the potential challenges coming up. The governments have got to find a way of raising some more revenue to help pay for the additional costs they've had to incur over this time. Indeed, we've seen across the world again some VAT rates moving and some rather large increases in VAT rates to help increase the revenue take. I'm not suggesting for 1 minute that will happen imminently here, but it's always a tool, as they proved in the financial crisis, that VAT rates can be tweaked without too much of a fallout, politically at least. So we have to be prepared for that. But more likely, we see a drive for the revenue to collect more of the money they are due, and bringing in initiatives to do that. Historically, the revenue authorities have been, not great at collecting what they know is due, let alone what they don't know is due. And so, initiatives have been put in place, and they started a while back, and they are being brought forward to try and address that situation. With that said, from businesses ourselves, working out what the future holds has been a challenge and an ongoing, almost daily occurrence within businesses. And we're trying to protect our cash. We don't know how much we're going to be affected in the near future, and so we are aggressively protecting cash flows as businesses, and looking at ways to address and push out inefficient processes, and lots of restructuring, but we need to continue the drive, and certainly we see businesses doing so, of doing more with less, even more so than perhaps before. What COVID has taught us, and certainly we're seeing this in surveys that are being presented by the industry over the last couple of months, is that it has accelerated digitisation within our organisations and within businesses, and that is borne about by more and more people having to work from home or having the opportunity to work from home, and some of those surveys are show us fairly significant that that's a trend that might continue even after we go back to normal, whatever that might mean. And so there is an embracing of digital transformation and the introduction of technology, more and more technology to help us do our jobs more effectively, but also remotely. And as you see from quote from Microsoft, the acceleration has been quite stark over the last couple of months. So making tax digital, it all comes back to making tax digital. It was an initiative obviously kicked off a couple of years ago, specifically around VAT to start with, but it is moving into the other taxes. This, is a real drive by HMRC to get organisations to embrace the digital age and to help reduce errors and ultimately increase the amount of VAT or tax they collect. Although thankfully this has not been accelerated over the last year, they are forging ahead. And with the current planned requirements set to come into play in April next year around digital links on your VAT returns, that requirement is still there. It's not being extended further as far as we can make out. In fact, HMRC have been very bullish about keeping it where it is. And whilst we were talking about partial exemption special methods here, that partial exemption special methods are one of the exceptions. You can do your calculation outside of a digital environment and bring it into your digital platform for submission to the revenue and the VAT return. It's an exception that was brought in fairly reluctantly, in my view, by HMRC, because they want everything to be digitally audit trailed. They want to be able to see exactly what's happened in the calculation of an end-to-end VAT return, so that they can help organisations and also see errors are being stamped out. And indeed, in their guidance, they said, whilst you can do a PESM calculation outside a digital platform, it's not best practice, and perhaps you should think about it so as to avoid manual errors. But what they're after with MTD is that complete visibility through digital links and audit trails that they can see from the data coming out of an ERP system all the way through to the submission of the VAT return to them. The other question is why are they doing that? HMRC's published figures. This is the tax gap as they see it. We can all have arguments about how accurate these figures are and what they relate to, but what they're trying to achieve is a reduction in the VAT gap, the tax gap. It's been something they've been looking at for many years. But from their point of view, they're looking at the easy targets, which is unfortunately businesses, and big businesses are unfortunately the easy target, mainly because we want to get it right. We want to get things right. We're not generally, businesses are not into criminal activity or tax evasion, and we don't like surprises, and particularly our shareholders don't. And so in amongst here, these numbers, there's two key ones in here that they're trying to address by having MTD and trying to stamp out some of the potential for error, and that is the errors and the failure to take reasonable care. That's 8.6 billion out of the total tax gap. MTD is not going to fix it all, but it will go some way and to reducing that, and they have their own predictions of what that's likely to be, and it remains to be seen whether that actually transpires. So what are the challenges around partial exemption special methods? They can be really complex, and one of the kind of I look at it as breaking it down into a couple of different areas mainly. There's the challenge around working out what our recoverable percentage should be and agreeing a methodology on which to be able to do that. That could be, taxable sales over total sales. It could be a headcount. It could be a number of transactions. There are many with different ways of calculating a percentage, which produces a fair and reasonable recovery percentage for a particular section of a business. One of the big challenges that I find with a lot of businesses I talk to is actually the cost allocation. So getting the right amount of VAT into the right bucket to apply the recovery percentage to can be a real challenge, depending on the profile of your business and what you spend money on and how that's booked within the finance systems. This area I've seen and in many companies produces the most amount of spreadsheets, quite often because you're taking data, financial transactional data, and applying it to data produced by other parts of the business and systems that aren't generally linked or even lend themselves to a finance function, particularly when you're talking about numbers of transactions or headcounts, trying to get HR information into a finance system. And a lot of time is spent identifying when things change, which then has a material effect on where those costs go to. So being able to check that an additional column or additional cell hasn't been introduced to one report that then breaks all the formulas and links to the next spreadsheet that actually then produces the one piece of information that gets fed in to allocate a cost or to calculate a recovery percentage. Other areas of complications come in when businesses have sectorized methods. That's more and more common as time goes on, as we break our businesses down into sort of the revenue generating areas, so the business activities that you can actually separate out that deserve their own recovery percentage because they do something slightly different and have a different cost profile perhaps to another part of the business. And so with sectorization, it becomes more complicated to do the allocations, and sometimes trying to understand what the recovery metric should be for that particular business might be very different to another. And another one that always crops up is the often painful annual adjustment. So as the HMRC's rules state, your quarterly, if you're lucky enough to do quarterly rather than monthly returns, are just provisional from an input tax point of view. Once a year, you have to do an annual adjustment based on the whole year's worth of data that you've pulled in to the VAT returns, so that it will balance out all the fluctuations in the business. That can be a very painful, long exercise once a year. And you tend to have to go back to old VAT returns and pull the same data and run the same reports, but amalgamate them all together just to get to that blended result at the end. And in amongst all of this, we need to prove that every step of the way we are in compliance with our agreed partial exemption method with HMRC, that we have done the allocations to the best of our ability to make sure that we've allocated the right amount of tax to our taxable supplies, to our exempt supplies, and then applied the right recovery methodologies to our residual input tax. A lot of focus can be spent by HMRC in this area and in checking to make sure that that every element, every bit of the process through a PESM has produced what they have expected and what they agreed up front when they signed off on a particular method, to make sure that you are recovering no more than you should, and making sure that they are collecting what they should. So why automate? Well, automation, like in any field, is not a panacea. It's not the end of human involvement within any process. The main reason for automation, certainly in my eyes, is to produce efficiencies and actually to focus the expertise that we've built up in our businesses for people who actually do this calculation, to focus on other areas of concern rather than predominantly, again in my experience, most of the checking of the VAT return is making sure that the formulas are working, that the links are working, that the spreadsheets are bringing through the right information from the right place to do the calculation, and less time is actually spent looking at the underlying transactions and whether or not they've been treated right in the first place, whether they should have had VAT on them or not, and more VAT related checks, as I would call it. Automation should improve accuracy. You can automate the agreed methodology, and then that consistently works every time you do a VAT return. We can automate the cost allocation, so you can set up an automated allocation model that is consistent, that applies the same rules each time, to get the consistent results. And the other thing, for me, is a great thing around automation is being able to look at and have better visibility over the data that's being produced, so I can produce the trend analysis between periods, between years. I can understand whether or not something looks odd, because I have more data at my disposal, but also I can get it presented in a way that I can actually visually see very quickly whether something looks right or not. Another benefit of automation, particularly if you have a dedicated tool to do the job, is that actually change management becomes a lot less expensive, because a lot of systems available today are self-maintaining. So any changes in businesses, any changes in reporting structures, anything that can be easily tweaked within a dedicated tool, rather than having to go and make wholesale changes to our finance systems, which often involves a large cost. So what do we need a compliance software or an automated PESM to look like? The kind of things we see that it needs to be in there. We need to be able to take data and apply mapping and filtering to allocate and to take that data and put it in the right place. We need to build templates within that system so that the same consistent treatment can be done each period, and so therefore the whole process a lot more efficient and less time consuming to actually produce the return in the first place. Clearly, we need to be able to build the PESM within a system as agreed with HMRC, whether or not it's got one sector or 30 sectors or whatever it might be for your particular business. And we need to set up how it calculates that recovery percentage, and then how the costs are attributed to each of those sectors in the right way. It needs to have the ability for auditing. It needs to have the ability to be able to block particular transactions that shouldn't go through to recovery. It should have the ability to exclude any entries within the financial reporting that shouldn't be included on the VAT return. We also need it to have inbuilt checks to enable to bring to our attention quickly and efficiently where we should focus our attention as part of a review to ensure the accuracy of the return. So what we want to see is exception reports for certain items, so that we can actually then go and check to make sure that the data coming through is correct and has gone to the correct place. And we also need manual adjustment facilities, because not everything's the same every time, and not everything can be automated. Mistakes happen, and so we need a facility to be able to correct those mistakes on the VAT return and produce that auditable event that can be fully checked by anyone in the business, but also HMRC. So if I look at a typical PESM that I've dealt with on a number of occasions, this is typically how I would build it up. So I would need to build the sectors and name those sectors, select a recovery option for each of those sectors, and then I want to be able to upload my financial data, my AP reports or my VAT reports, and then I want the system to know where to allocate each of those transactions to within my VAT return, whether that be straight to a box on the VAT return because it bypasses the past exemption method, or through my allocation engine, which then takes that whole cost or a percentage of that cost, whatever I've agreed as to what the allocation looks like, to the right sector to then be able to apply my recovery percentage as agreed for that particular sector. Now I'm going to hand you over to Drew, if that's all right, to actually show you what an automated PESM could look like within AlphaVat. I think he's going to help show you where those digital links are created, how the digital audit trail is there, and any manual processes. And then we'll take a look at some of the data analytics, etc. So I will just do a stop sharing my screen and pass over to Drew, and he will take it from here. Thank you very much.
Thank you, Matt. By way of introduction, my name is Drew. I'm part of the professional services team here at Tax Systems. I'm just going to share my screen. Hopefully, Matt, if you can confirm, you can see welcome to the MTD compliance portal.
I can, yes.
That's the hard bit done. So in terms of what I want to show you today, very briefly, I want to just give you a high-level overview of how AlphaVat works in terms of infrastructure, but we're going to focus on what the PESM calculation looks like within the system. So just a brief overview, AlphaVat is a cloud-based solution hosted on Microsoft Azure. When you log in, you'll be asked to put your username and password. And when you sign in, you have the two-factor authentication. So at this point, I've just requested the code to be sent to my phone. And when I punch in the numbers and verify the code, that takes me to what we refer to as the entity management screen. So this is basically one central repository where you can list all your VAT returns, and we can look at group structures. You can separate out returns by folder if need be. It will give you the next obligation period and the next obligation due and the current status. So this is very much a high-level overview of what AlphaVat will look like when you log on. Now, a few admin points. Firstly, in terms of the user management side of things, now a lot of licenses are predicated on number of users, but the management team at Tax Systems have taken the view that you can add users at your own discretion. So ultimately, what this means is you can add a user, you can restrict the user role access rights for that user. And if you define folders or folder structure, you can set specific criteria for people to see certain VAT returns in different folders. Lastly, in terms of the help menu, you've got things like technical support, frequently asked questions. A lot of that paraphernalia we've put online on the basis that we're getting asked similar questions on MTD. So you'll have visibility over all of that data within the portal. Now, if I toggle back to our entity management screen, I've got a host of examples, but again, as I mentioned, I want to focus just on how the system deals with PESM calculation. So I'm going to go into a predefined file. Now, in this example, a lot of things would have happened to get to this end point. And I briefly want to talk you through the steps rather than show you. So the first step would have been from an ERP system, you'd have had to download your source data. Now, it could be forming the sales ledger, purchase ledger. It could be multiple files or it could be one file, but it doesn't matter. We just need to download the information from the ERP system into a CSV file. At that point, what you then do is AlphaVat will ingest those files into the system. Now, in the background, we have a VAT implementation who would have done a series of mapping. So that would have defined what goes from box 1 through to box 9. And then once that mapping is done, which is all in the back end, each month or each quarter, depending on your filing requirements, when you run the calculation, you'll get to the VAT return. So effectively, what you see on screen is a completed VAT return. Now, if we specifically focus on the PESM element, if we toggle to box 4, in here, you will see I've got a line for my purchases, my net amount, and then I've got the input VAT recoverable. Now, AlphaVat supports obviously fully recoverable, standard method, and the special method. And to show you how the special method looks like, when you go into that cell, you will see here that in this particular example, I've got 3 sectors within my business. So I've got business unit 1, 2, and 3. Now, as Matt alluded to in his presentation, the cost profile varies from one sector to another, and each sector will have its own recovery method. So for this example, we've just taken a range. If you look at business unit 1 and we look at the recovery method, in this example, I've got my taxable over total to get me to my recovery percentage. In business unit 2, I've done on headcount, so number of employees to get to a percentage. And lastly is done on transaction count to get to my percentage. If I scroll down, you will see that I've rounded these to 2 decimal places. And based on the mapping, which would have done by our VAT implementation team, if I just scroll down a little bit further, the system automatically will attribute a split between your taxable, exempt, and residual. Now, at this point, if you want to work out the recoverable amount per sector, the system will automatically take this recovery percentage and apply them to residual VAT to get to the residual recovery amount. And here you will see the total amount that is recoverable for that particular example. So what I will do later on is actually show you how to build these sectors and how we define the recovery rates. Now, before I do that, one of the key features of AlphaVat is not just working out your recoverable input VAT, but it's also to give you the detail behind these numbers. And if you cast your eyes to the left-hand side of the tree, what you will see is that we have an input VAT allocation summary. So what this does, it shows how the input VAT has been attributed in the sectors for recovery calculation purposes. So you can see the split between each business unit. If we take it a step further and we want to see how this has been split between the different cost centers, again, this shows the consolidated total residual input VAT grouped by the cost center. And if we take this another step further, we can see how those cost centers are split between the different business units. So once you've got a holistic overview of what's happening, what we'll also do is a summary tab. So AlphaVat will show you the split between your taxable, exempt, and residual, and it will split it between each of the business units. The same also applies to sales as well. So again, if I just toggle to the tree, and if I go to my sales summary, if I want to see the split for business unit 1, and I wanted to see the detail behind that, you'll always have access to the granular level of detail that is going through the VAT return. Now, as the focus of this webinar is on the PESM, what I want to briefly touch upon is how the system gets to these different sectors and how we apply the recovery methods. So at this point, what I'm going to do is go into what we call a PESM build. So you see on screen that each of these tabs represents a different stage of the VAT return compliance process. And if I hover back to what we call the PESM builder, when our VAT implementation goes through your data, we'll get the letter, the PESM letter from the revenue, and then from that we'll work to figure out how we can build and automate your PESM. So the first thing to look at is how do we manage the sectors? So really simply, what the system does, it allows you to add a sector. And in this example, I've added business unit 1, 2, and 3. So I've got 3 sectors. Now, each of these sectors will have a predefined recovery rate. So at this point, what I'll do is continue to the recovery rate. So again, if we look at the 3 sectors, the first was based on taxable sales amount. The second was done on headcount. So on the summary page, you saw it was 250 over 1,000. And lastly, it's based on the transaction count. So again, here I've got 1,000 over 800. So that's basically how you define your business units or your sectors, and B, how you get the recoverable amounts into each of these sectors. And lastly, in terms of managing your steps, if there isn't a pure attribution rate in terms of defining what your residual transactions are, then within the system, what Matt and the team have built is a summary allocation step. So at this point, you can add and you can define what percentage is allocated to different cost centers based on the different sector split. So that's very much giving you a high level overview of how the specific PESM calculation works within AlphaVat. Now, within the system, we've got things like data validation, data cleansing, we can look at manual adjustments, and there's a lot of things that can be done within the system. So if there's at any point, if you want a bit more detail, do contact our marketing team or the sales team, and we can run a bespoke demo for you. At this point, Matt, is there anything you'd like to add?
No, I think that was great. Thanks very much. I mean, in terms of things like this, the steps here, I mean, this is really a facility to take your unallocatable costs, so those that you cannot define that go directly to sectors, and that pool of costs, which is usually the overheads, office space, that sort of thing. There's the opportunity to allocate those back to the revenue generating areas of the business or your sectors by whatever method you've agreed with HMRC. So, there could be instances where it's quite simple. You have a cost center structure. So in this case, in this example, for example, you group all the VAT up by cost center, and it's a simple cost center to sector allocation because there's no repeating cost centers across them. However, we know life's never that simple, and so what the ability of this particular section does is allows you to then use a headcount report, and you can upload a headcount report into this particular section of the system, and that will then we can ask it to apply to the costs and actually allocate it to the sectors via a headcount calculation. Or similarly, we've had examples where people have had in office canteens, and so we'll do an allocation on floor space for canteen use, and etc. etc. But it also allows you to be able to adjust your costs from one sector to another and have that full audit trail and digitally stamped within the system. So it's not just we'll tell the system to allocate it and that's it, it's done. There are adjustments that can be made within the system as well. Another point to note on the recovery methods, you can either actually have a manual input for the recovery method. So if you have an agreement with HMRC, you'll use last year's annual adjustment percentage throughout the year. They can be manually input, but the system will also calculate that recovery percentage on, so certainly around taxable sales and taxable transaction counts. If the transaction count correlates to transactions that we've recorded as part of the AR information coming in for the VAT return. The system can take that data and use that to calculate those percentages. I'm just going to bring up the screen. We've got just a few minutes left, and so I just want to spend time just sharing a couple of use cases that we've for places where we've used DAO for VAT, and just what we've managed to help our customers achieve by automating processes. So typically on a VAT return, there's data collection, there is the VAT calculation and a review process, and typically a higher level review for sign off and submission. And in this particular case, it was a wholesaler. It's got loads of UK stores as well. All of that took on average 37 days a quarter to achieve to complete the VAT return, which is a lot. Putting in an automated solution to help them with that, particularly around the data collection, the actual calculation of the VAT return, and also the review process, which actually gives you information to make that review more targeted, results in a big reduction in the amount of time that it now takes them to put their VAT returns together, with the level and comfort of accuracy that they required. And again, looking at one of the financial institutions, this is a very similar story. In fact, quite bizarrely, but not on purpose, the time taken was exactly the same. But again, it was all down to making sure, sifting through their data, getting those calculations in the right place, making sure they could have put their partial exemption method across those transactions, and again, by automating large chunks of that process, keeping the reviews, which always must happen across there, but being able to target those reviews with the information within the system, pointing them in the right direction with some exception reporting and trend analysis, meant that again we managed to reduce that time down to a much more acceptable 11 days for a complex business. So I just want to recap, like anything, the current situation combined with the MTD initiatives with HMRC has given us a great opportunity to automate more of our processes and to increase efficiency, and also to help reduce the errors that can occur in manual processes. Just to remind everyone, MTD hasn't gone away. We are still have the mandatory digital links requirements for periods beginning 1st of April onwards on VAT. And yeah, automation in a specialist tool does reduce potential risks associated with spreadsheets. Spreadsheets still have a massive place within our finance departments and certainly within our processes. I tend to use them as a checking tool rather than the tool of completion. Rather, it's, I think that's a far better use of them. And just look at compliance engines. They're specifically designed to do a specific job, and therefore usually have much richer functionality than a lot of other solutions that are just part of a wider base, particularly around ERPs. And yes, other than that, I thank you very much for listening to us. And if there's any questions or you need to would like to talk to someone, please do reach out and contact us.